Our next problem from the workshop deals with a simple bank reconciliation. The purpose of a bank reconciliation is to reconcile the balance per the bank statement for the cash account to the balance that is in the company's books and records. So the first thing we need to do is to look at the balances from the two different sources. Our bank balance shows an ending bank balance of $76,674. Get confused with the beginning balance, which is the ending balance. And the company's cash account in their accounting record shows a balance of $78,984. So we have a difference between our two accounts, and we're going to begin by adjusting the bank balance. And what we are looking for when we adjust the bank balance are things that are in the company's accounting records that are not on the bank statement. So the information that is coming from the bank statement will not be used for this part of the reconciliation. Instead, we're going to be looking at the information in the company's records. The first thing is we have deposits that were outstanding. These were deposits that were made probably to a night drop box or through a on-the car pickup that we show as being deposited, but were deposited in the bank before it could be accounted for on August 31st. So a night deposit of $8,200 was made on the night of August 31st. It will be credited in the bank records on the next business day. So we have to adjust for the deposits outstanding. Now, is this going to add to or subtract from the bank balance? Well, obviously, since this is a deposit, we're going to be adding to the deposit, and that is for $8,200. Next, they tell us that we have checks that were written and recorded in the accounting records, but not yet processed at the bank. So will these increase or decrease the bank balance? Obviously, a check is going to reduce the bank balance, so we're going to subtract that. These are checks outstanding, and we're going to enter this as a negative amount. The final thing that it tells us, a $2,000 check to the supplier was correctly recorded by the bank, but is incorrect in the company's records. So we don't have to make an adjustment to the bank balance. This is going to be an error that we caught by doing this reconciliation. So our bank balance is now complete. We can sum up our column, and our true reconciled balance in the bank is $76,454, and that's the amount now that we have to reconcile with our accounting books. The source for the reconciliation will be the information contained in the bank statement plus the error that was uncovered. So we're going to look for things on the bank statements that are not in the accounting records. The deposits and checks that were processed at the bank, except for the outstanding ones, have been reconciled between the two. So the first thing we have is the service charge. The service charge reduces the bank balance, but has not yet been entered into the company's accounting records, and we're going to have to subtract out that amount. We have a return check that we did not know about until we got the bank statements. Again, that's going to reduce down our book balance. NSF check. And then finally, the last deals with this error. The correct amount of the check was $2,000. Our accounting records show this as only $200. So we have a difference of $1,800. Will this add to or subtract from our cash account in our journal? Obviously, we have to credit cash for an additional $1,800. That's going to reduce the cash balance. So we're going to reduce it down by $1,800. Now when we sum up our column, it should equal the amount in the bank balance. It does, and we have now reconciled. Remember that any adjustments that is made on the book balance portion of the reconciliation will require a journal entry. So we will have to make an entry that debits for the bank service charge, that accounts for the NSF check, and corrects the entry for the error. We're going to be dealing with error corrections in Intermediate 3. Right now, all you need to know is the basic bank reconciliation.